Good turnaround Tuesday, Warriors. AJ, how are you? Bran, Shahab, Michael. Everyone doing okay? Why don't you guys text what your turnaround Tuesday play is? Help me out. You have one? Okay. So I'm going to start off with Stel.
Hey, good morning, Coach.
Hey, how are you?
Hello.
Hey, good morning, everyone who's here. Let's see who's on our team. Well, I know who's on our team. Who's here? K-Man's here, Stel, Steve.
Ryan is off to the football, so
yeah, isn't he off in Amsterdam or something?
Something like that.
Oh
Prague.
my God,
Prague. I'm sure he's making a stop at Amsterdam to get some of his favorite herbal remedies.
You mean gummies?
Never been there. Never been there. You been there, Stel?
No, that's what I tell my wife. No, I've actually never been there. Actually, no, I've been there once I was 12, so that doesn't count.
Were you amazed what was in the windows?
No.
At 12. Oh God, it ruined you at 12. All right. Anyway, why don't we start with the metals, Stel? Silver's trying to turn here from last week's lows. I think 2450 is going to be tested out here. To me, that's kind of an important area, a very important area. And when you think about it, it did fulfill the $1.50 objective at 23. So, I'm wondering if we get to 24.5, we're on our way. What do you think?
You're absolutely right. 24.5 is the main level, and on the downside it's 22, and anything in between 22. For me is chopping. What do I think happens? I think unfortunately for longs, and I'm long, I think unfortunately it's probably a little bit more than 50-50 that we test 22 first, but depend on the Fed in a huge way, and the fact that with payrolls coming out really strong and metals not really, crapping the bed, that's a good sign for now.
Maybe they could fight interest rates. Go ahead, Blake.
I was going to ask, if you take it to a 4-hour chart, do you see that little inverted head and shoulder pattern there? On on silver. Yeah, little you can really map out. Now it would be symmetrical right around here. So that's a right shoulder. That's a left shoulder. There's the head. There's exactly.
Yeah. And the breakout. So over 24 is going to give you the move over 2450.
Correct. That would be the move that helps Stelio, his best friend, out.
Okay. All right. And dollar still strong. I was thinking, is this going to be a failing rally yesterday, and we pulled back, and then I go, oh, they're giving me another chance to do it here, so I don't think I'm going to do it. Good eye on Aussie yesterday. We pointed out to the room that it was the one showing relative strength on its pullback. It hardly pulled back, and then you got your RBA news, right? And I think Grega also put out a bullish call on Aussie.
He did. Yeah, RBA surprised the market. Now, I'd love to hear what.
He's there for a victory lap. He always shows up for victory laps. That guy, the Wizard. Huh?
Grega, let's hear the victory lap.
Yeah, go ahead, buddy. 68.50.
68.50. Yeah, I'm in 68. Yeah, around there.
Okay.
Yeah, but I think that's still the first leg higher. As you said yourself, dollar is still very bullish. So I think that the dollar index is not done yet with the current corrective rise. I still think that there is room for 105, 107. And in the meantime, when the dollar index is ready to continue higher, I think that Aussie can face a pullback. So I think that this upcoming pullback could be actually opportunity on the long side. So 66 is a very important level, in my opinion.
Okay.
It was also the area of the former swings here from March and also back from start of May.
Yeah.
The swing
take
lows.
out the stops. This is what happened when they took these stops out, and now everyone who's short has their stops over this high at 68.18. So we'll probably go to 68.5 and fail.
Yeah,
what do you think?
Well, I think yes, that definitely it's going to be a strong resistance. But for now, since we have only one impulse up from that recent lows, I just think that no matter what, we should stick with bullish call on after pullback.
Okay, so you're thinking that even from here we could maybe get a 2.
Yes,
a little
exactly.
pullback. Okay,
And then more.
And then we go.
Yeah.
Okay, that's pretty valuable, actionable things to consider, and probably weren't thinking about that.
So
Go
if
ahead.
I can
Great call, Grega, by the way.
So if I can add, I mean, Euro is also still one of the weakest. I compared some of dollar pairs, and since last week when US yields turned higher, actually, we have seen the still euro dollar being very, very weak. And if you want to be a long dollar, I still think that shorting the euro is probably the best pair to pick at the moment. But I think that 108.30 is the resistance after the wave 4.
Yeah, that's where I would do it. So, and that would probably equate with the 102.5 or so dollar index. Kind of,
Yeah, I mean 103 and then go up towards 105. Yes.
Yeah, well, this is what everyone. So you're thinking it could be a flat if it stops here. But if we break out over this is an important moving average. I think it's a 200-day. And also you'll end up with a straight line there if it pauses. I think we could go 110. Don't you have any kind of bullish count? I mean, can't we retrace? We had a 1,400 point decline. Can't we retrace 61.8? And that would be 108.
I'm just wondering what would bring dollar so much higher. I mean, US yields potentially will face the limited upside, I think, by the end of the year, if we consider what the Fed is maybe planning to do. So I really don't see dollar index moving that much to the upside.
And Dale and Greg, I just want to say one of the things I've been, reading a lot of and actually talking with Chris Weston over at Pepperstone is about like the liquidity crunch that might be facing the dollar regarding Treasury issuance. And I was just reading JP Morgan's recent piece on that as well. And maybe that's something that could goose the dollar higher. And then you couple that with maybe some stock market selling as a result of having a liquidity crunch, and then next thing you know, you have the dollar kind of gets this double whammy effect. I'd love to hear what Stelios and K-Man have to say about that too.
Yeah, and almost at this blue line off these prior two highs, Blake. I think you have this line too. That comes in around 43.30-ish.
Yeah, I mean, I look at 43.20, which is the longer term 618 retracement, and it's a horizontal resistance too. So yeah, there's a lot of confluence up there.
What's Walsh doing, buddy? I mean, I know he sold one partial short at 42.20. He thought we could trade 43. What did he say Friday?
I don't know how he's trading it. I'm not too sure, but he has called this move correctly over the last couple of months. So
yeah, the upside he has.
I'm not sure how he's expressing this move right now.
All right, Blake, I'll read it. I'll go ahead. I'll read it.
I know you were looking for the quick synopsis on it, but I don't have it.
Don't you have any cliff notes?
I don't have the cliff notes on his technical review right now. No, I do not.
Now it's chat GBT, but in my day it was cliff notes. So, to save time in school.
I know you were that guy. You were that guy that was always looking over my shoulder, and then I was looking over the other guy's shoulder.
Yeah. Well, you could see the patterns when you darkened in those questions, A, B, C, D, E. So I used to chart that before I got into the business. Anyway, so, okay, Grega, let's talk about yields, because I mean, you've been kind of sanguine about them for a while, and we had this move from 360, almost fulfilled it. Everyone, I'd say majority of people are looking for lower yields. I know people looking for 280, 3%, but what if we break out? I mean, it's possible, isn't it? What if the Fed shocks the market with a half? Not everyone's expecting nothing. I mean, when you look at this consolidation here, Grega,
Yeah.
couldn't this be like a wave 4 triangle that we need one more shot out of here for it to be terminal?
Yeah, I mean, if we will stay in this range, then obviously I think we have to stay for a little bit longer trapped in this range. So if maybe this range will continue through the summer, then maybe yes, another leg to the upside is coming. But even if the US yields will on the 10-year will see a new high, meaning above to the recent October levels, even if we jump there, I still believe that dollar index will not reach a new high, will not pass that the same high. I still think the dollar index will make the lower high.
Yeah. 108 is what, about halfway back, isn't it? Or no, a little bit more.
Around there.
Okay.
Yeah,
and
but since you asked, I'm looking for this also to be a triangle, but I'm looking to be in a triangle in a wave B of a deeper correction.
Down here?
Yeah, towards 3%. That's the downside projection.
Okay.
Yes, I'm looking at. And at the same time, I think that this move to the downside could resume when dollar index completes this flat around 105 to 107 area in that region.
Okay.
And then both move together to the downside.
Did we miss the low in silver here and gold?
No, I think it's a little bit of more downside coming, 1900 on gold, and still I see silver also in a corrective wave B rally, a smaller one. 24 around here is a resistance.
Okay, and all buy zone eventually where?
Around 22, where you have marked this level.
Copying me. I like it, Grega.
Yeah.
I like it.
Copycat. The wizard's a copycat.
You know, we have to ask.
This blue line is so bold that I cannot miss it.
You know, we have to ask, you asked about the dollar, you know, what if it spikes? We have to ask ourselves, what needs to happen for the dollar to go above? I think 105.50 could be the last hurrah for the Dixie, but what reason could we have for it to go to 110 or 112? For me, the way I see things is only a kind of 2008-like crash, some kind of extreme market panic, where the default reaction is to buy the dollar, even though that more often than not turns out to be the wrong reaction, but that's the market reaction. So
so it'd be it'd be because they're looking for a haven.
Exactly. So I think that's the scenario where that happens.
And that's how you could get yields to fall too.
Exactly.
Right? I mean, every time I'm thinking about the bear case in yields for them to come down, I kind of think, everyone's saying, well, maybe it'll be Fed action, but they may not tighten, but they're not going to ease. I think it would have to be risk off. I can't come up with anything else.
I agree 100%. The Fed, they might not be hiking this meeting, they might skip this, but let's face it, they're close to the end. They've said it, and the data also, apart from employment, which has been solid throughout the past few years, apart from the COVID blip, the data is softening a lot. Price data, inflation data, everything is softening. So the Fed, as far as they're concerned, their job is done or almost done. And there was a piece on, I think, on Bloomberg saying that there's going to be a 3-handle CPI year on year on the next sprint. I mean, that would be very, very important. I think that would cause the Fed to say, yeah, we're done, at least for now. So I think the only event where the Dixie goes to the moon is a major market
financial crisis.
Exactly.
Yeah. All right. I just want to show you guys this.
Or, sorry, one more thing. Or we remember the 50% of the Dixie is euro dollar, or something terrible happens to
the war.
Yeah. Yeah. If something terrible happens to the euro, of course, the Dixie goes up because 50% of it is euro dollar.
Yeah. So, you know, a tactical nuke by after Putin gets humiliated during this counteroffensive in Crimea, he'll become so, you know, it's important that they don't really humiliate him on the battlefield, because he'll resort to it. Anyway, I wanted to show this key reversal in Apple after they
there's a big one yesterday.
Yeah. So
what do you mean? The world doesn't, not everybody's going to buy this $3,500 equipment?
Yeah, yeah.
That
took 4 years to come up with, so kind of a dud. Under 170 is the signal.
Do you think it's going to be like the same thing as was it Google Glass? Was that what it was called? Do you remember that?
Yeah.
Nothing really big has taken off in the metaverse that I hear, AI, yes, people, but the metaverse, I don't know, how much time do you spend? Like you said, Blake, I'd rather
until I get to poop there, real. I don't believe it.
Yeah, on the beach with the Corona. I don't want to look through a pair of glasses pretend I'm doing that. So anyway, just I wanted to show you guys Apple back under 170 is a signal. So anyway, it's a leader, so keep an eye on that. And WTI, you were right, Blake. I mean, these guys keep trying. Saudi cut supplies, and lousy follow through. Maybe we're going to try the lows here again. So I don't know what to do with it.
Do you mind if I take the screen for a second?
No, sure, go ahead. Take it for 100 seconds.
Okay. For a couple things, so regarding the dollar index, notice that the dollar index pullback has only been, it's not even to the 38% retracement. So we kind of, looking at it as a flag pattern, which means that it might be actually capped right now or close to, so the euro might find a low, especially as we head into North American trade. One thing that I am a little worried about is, as you pointed out, Dale, with the S&P, we're seeing a bit of a reversal. We saw a reversal candle yesterday in the S&P. Well, it's like, depending on, what you're looking at here, that could end up being, a shooting star type of move, depending on how today closes. But I think you pointed it out that Apple really had a big reversal yesterday. And that's something that I think that bearish engulfing candle is something we got to pay attention to, especially when it hits all-time highs and then reverses like that. So kind of a big deal. Grega, great call on the Aussie dollar. Aussie, as it's coming up to the 200-day moving average, 618 retracement, 50 DMA. A lot of resistance, obviously natural resistance here. So we'll see a lot, on a lot of these central banks, especially when you talk about, the RBA or the RBNZ, a lot of times that those central bank moves end up getting unwound like the day after for whatever reason. It's happened with a lot of central banks. The RBA may be a little bit different because they did actually talk about how they may have to they did not only a surprise hike, but also a hawkish hike at that. So it'll be interesting to see what the Australian or the Aussie dollar responses will be following today's or last night's move. Have we heard from K-Man this morning?
Yeah, good morning, everybody.
Oh, good morning, K-Man. Hey, I was gonna ask you what I wasn't sure if we talked to him yet this morning, or I had to step away for a moment. So, what are your thoughts on A, the RBA, and then B, about what could actually create some further dollar strength? Stelios told you what he thought. I think Grega had mentioned what he thought. What are your thoughts regarding the RBA and then continued dollar strength here?
Yeah, the RBA was a bit of a surprise, but then I said yesterday on the Flow Show that there was, in my opinion, a chance that they would hike, looking at the recent data, and they did. So that came as a bit of a surprise to the market, and I think that's where you also will have to make a distinction if you want to trade the dollar between what are you going to trade the dollar against. And if you think that the dollar would have another leg higher in it, then you're going to have to look at stuff more like perhaps the euro, where the data are showing some more weakness. We've seen the ECB consumer inflation expectations coming out this morning, and there was a big setback from 5% to 4% in the 1 year, and especially on the 3 years going back to 2.5% already. So that is part of your weakness in the euro, and as Stel already said, that's 55% of your Dixie. So choose your dollar wisely, I'd say, if you want to be long dollars. And what could create a dollar higher? A crisis, but perhaps just weaker data elsewhere. Because if you look at the euro is back to where we were exactly on the ISM yesterday. In the US, and dollar yen is a bit lower. Cable is roughly back to where we were, but the rest of the dollars are perhaps a little bit stronger. So yeah, I think it may be like weakening data. If the data weaken faster elsewhere than in the US, then you still will find the dollar buyers here and there.
You know what's wild, as you talk about this, have you looked at Norway?
No, I mean it's ridiculously weak.
And we're approaching like the highs. We're not too far away from like the highs that we saw post-COVID crash.
Yeah, it's a bit of a. I mean, Norges Bank continues to sell Norwegian kroner every day, and then you get the oils that can't really keep up. Because now it appears that after the OPEC, the Saudis were a little bit on their own, right?
Yeah.
Read a report that actually the Russian oil output is up 20% since the beginning of the year. So they are not cutting at all. But yeah, I think the oils are really playing against it. European gas is also lower. Where the NOK may get some strength, it will be after the summer, going into the winter, depending on where the European reserves are at for the next winter. But it may take a while. In the meantime, it's I've tried it twice. Once it didn't cost me anything. The second time I lost a bit of money where I was off, but I'm not going to stand in front of this right now in the Norwegian kroner. It's just too weak, and Stocky is even weaker, but that's a different story.
Yeah, I mean, we were talking yesterday in the chat room, with the crude oil market, we fill the gap, and then, $70 is next. We're approaching a 618 retracement. And I have to say that, with crude as weak as it is, it's definitely going to affect the NOK. How about the CAD? We have Bank of Canada. Sorry, it's still 5 o'clock in the morning for Dale and I here. Bank of Canada actually tomorrow. So the dollar CAD probed some support, but we got a quick bounce back, probably with this weakness in crude. You have any thoughts here? Because market's expecting a little bit more of a hawkish BOC.
Big week for the Canadian dollar this week. We have a double action there with the Bank of Canada tomorrow and the labor report on Friday. Mm-hmm. And the labor report in Canada has been also stubbornly good. But then on the other side, what's his name? McClem has been really pressing on that he wants to pause, but they may be forced, a little bit like the RBA, to come up with something. They're at 4.5%. The market expects them to be on hold again, if I'm correct.
Yeah, correct. I think that's it's kind of like yesterday. Like we might get a hawkish surprise, we might get a hike, but I think everybody's expecting them to. I
think we need to be a bit careful because, but the market is already trading the Canada pretty positive, right? If you look at it on the cross side of things, if you take away the dollar, if you take away stuff like Euro Canada has been going down quite a bit since May, despite oil being very volatile, but not really keeping highs. It's a bit of a situation where the Canadian dollar has more support than it should, just by or via oil and other commodities that it exports. But it's going to be an interesting one because the Canadian dollar could come out as either side, big winner or big loser of this week. So Canadian dollar is going to be interesting.
Yeah, it is definitely going to be interesting.
133, right, on the dollar CAD, big level. If ever it would go down.
You know, I'm looking at it as a big consolidation here. So yeah, I would think 133 is pretty big. We break that, and you know, the dollar is really going to come under pressure. And again, I think about what like Grega is talking about as far as further dollar strength, and I don't feel like I should be fading the dollar right now. Look at how weak the euro is. So, how's that going to play into a dollar CAD story? Because when you're talking about, just a single currency like the Canadian or the Aussie or the Kiwi, they only have almost so much they can do against like a dollar move, especially when it's a broad-based dollar move. So I do get a little worried about that. Hey, what are your thoughts on the Treasury issuance here following the debt ceiling?
We're expecting, I think it's something like, if they want to replenish the whole what is it, TGA, the Treasury General Account, it's something like $1.3 trillion of global issuances until the end of the year. But the market is very short bonds, and there's, I don't know how many trillions are parked in money funds and in the RRP. So there may be a decent pickup of those treasuries. So it's going to be very interesting, and I think it starts tomorrow, if I'm not mistaken. Those issuances or so, that is going to be a driver for liquidity and perhaps even the dollar, to a certain extent. Is it tomorrow or on Thursday or so? It's on Thursday, it seems, the short-term bills. So that's going to be a driver. If they find enough takers, then it shouldn't have too much of an impact. But are those people having parked their money left, right, and center, are they going to be willing to let the Treasury off with an easy one? That's a different question. So be very careful where the final rates come in on those Treasury auctions.
All right. Well, thank you for your thank you. Thank you, K-Man. Appreciate that. Is Grega still here?
You watching Bitcoin now, Blake?
Yeah, Bitcoin's coming under a little bit of pressure. There's some news headlines about SEC, and this is from Gavin in the chat room. By the way, if you guys aren't in the ForexAnalytix chat room, this is what's happening. Gavin says U.S.'s Coinbase is never registered as a broker, NSA or National Securities Exchange or clearing activity, evaded the disclosure scheme for securities markets. Wow. So they never got their NFA license. They just never went through the SEC, and they have been operating as an unregistered broker since 2019.
But
they're done.
Guys, by the way, you realize who sold NVIDIA and bought more Coinbase a few days ago?
Who?
Robert Saylor? Or
not Michael Saylor? No, Kathy Wood.
Kathy Wood. Yes.
Great trade.
Kathy Wood is awesome. She's like,
my God.
Is something else.
She's a pinup girl.
Yeah.
Nope.
Anyway, I thought Grega might still be here, but he's not here.
Grega, come home. Grega.
Stelios, any ideas for today? Anything that you're looking at?
Don't have any particular trades that I'm looking at. I just think the main theme remains the same. I think risk probably grinds higher. I've said this for a while, and it's been going on, and I see no reason for this to change in the short term. Of course, when we get to the FOMC, things will change. But until then, I think risk grinds higher. Not worth being a hero and trying to go against it. My humble opinion, as always.
All right. Well, I'm going to take the opposite side of that trade, just because I think we reached just about to the 127% extension. I don't think after Apple's price action yesterday, we're going to reach this 618. What that will do from a technical standpoint is it'll still continue us with lower lows instead of higher highs that you see here. People will start looking back and saying, hey, well, we still are making a lower low from last year from that high right there. And I think that's going to keep this downtrend intact. But I don't want to really be bearish risk unless you get below 4,200 again. So, and I think that is the risk. When you saw the reversal of Apple and the S&P yesterday. What'd you say, Stel? I'm sorry.
I said I agree with that 4,200. Yeah.
Can you say I agree with Blake again?
I agree. I love you, Blake. Yes.
Oh, God, I love that. All right, just kidding. Dale, what's your best idea going into today?
I don't know. I gave 20 earlier.
Oh, okay. Well, there you go. That means if you haven't been listening, make sure you go back and listen to our recordings.
Yeah, that's why we record them.
You could get the recordings if you go over here to, where it says webinars and on our website, and you go to playlists, and then you can
videos. You can go to videos to see
wherever they're at. Okay, videos right here. There you go.
Interviews.
Latest uploads. You can listen to them all right here. And you can go back library, 7 years of recordings if you really want to, because we have 449 pages of these recordings. So with that being said,
it's a library.
Yeah, K-Man, it's really nice to have you back. Ryan, if you're in Prague, I hope you're having a great time, and I hope you make it to Amsterdam and get some gummies for Dale. Stelios, always great to hear your voice. And Dale, have a great interview.
Okay.
Thanks everybody.
Team.
Thank you, Coach.
Team. And Grega. Oh, wait, I need to say Grega because he didn't pop back in. Great call, Grega, on the Aussie dollar, and YouTube video. You guys should check out his short that he put out yesterday. All right.
Yes. Pavel Hala, welcome back, my trading warrior brother.
Hello, Dale. Do you hear me?
Yeah, loud and clear.
Yeah, that's great. Nice to hear you too.
Good to have you back. Saw your tweet, and you'll be talking about a market that's close to my heart. I'm telling everyone for months to build a silo and store it. So, let's move forward and hear what you have to say about the wheat market.
I know that you've been talking about wheat and grains in general for the past 2 months. So that's one of the reasons why I picked grains. But the second reason is that the truth is there is a lack of really good long-term opportunities right now. I think, or at least we've been thinking for a while, that it's best to be passive. For example, I'm personally just stuck in T-bills and have no intention to leave that position. And so that's the reason why I will not be making any, bold predictions about stocks or oil, because like I said last time, I'm still bearish on oil. That doesn't mean it is a great idea to short energy. That would be, I think, pretty dumb, because we are in a multi-year bull market, maybe more than a decade-long bull market. But the opportunity, I think, is still not there. And so I'm trying to pick more of a short-term opportunities that are less correlated with broad markets. So that's the reason I picked wheat. I just released a tweet today.
You want to share your screen here, buddy? Go to share screen.
I
know you brought some visuals with you.
Okay, here we go.
All right. Okay. So what were you saying previously? I actually think that you may see it as a short-term opportunity, but there's something out there in the Pacific called not just El Nino, Grande El Nino. Okay, so I remember the days El Ninos did bring dry weather to the Midwest during the growing season, and yields dropped, and there really isn't a lot of room for not a lot of carryover of a lot of this stuff. So
yes, I agree with you in this regard. And by the way, in the same way I'm long-term bullish energy, I'm also long-term bullish agriculture. So I agree in the long term, but I see a lot of uncertainty in the medium term. And it has a lot to do with the broad markets, especially the energy. I have a feeling that the grains and the agriculture in general will not bottom until energy bottoms. And I still don't think that energy has reached its bottom. So that's one of the reasons why I'm a bit reluctant to, embrace the long-term bullish bets on grains or agriculture in general. And there is also one thing you are well familiar, and it's that it works differently in commodities compared to, for example, stocks, because the tops in the stock market are a process, while the bottoms are basically an event. And it works vice versa in commodities, where the bottoms are a process. So it's very hard to time the exact bottom. We may be close to the bottom in terms of price, but you must not forget about the contango and these costs. But it is very hard to time the bottom exactly. So yeah, that's my reaction.
And everything.
Yeah. So it's much easier to time the tops in commodities. In the same way, it's somewhat easier to time bottoms in the stock market. But the bottoms in commodities and tops in stock market, this is more difficult.
Okay.
So let's get back to.
It's all, you know what? It's all difficult.
Yeah, it's all difficult, but something is more difficult than the rest, I would say.
Okay. Fair enough.
Let's get back to wheat. I published this tweet today, which was a reaction to my older tweet from the beginning of May, when we said that, of course, we were bullish wheat, but we thought that there would be one more brief dip below $6, which actually happened at the end of May. And now the price is recovering, and I think the bottom, the short-term bottom, and this is what I stressed in the tweet, the short-term bottom, the short-term low is probably in. So the seaboard wheat will most likely move higher in the short term, but as I said, I'm somewhat reluctant to make outright directional bets. So I identified a similar yet somewhat different opportunity, and it's an intermarket opportunity between the seaboard wheat and
Kansas City.
And the Kansas City hard red winter wheat, because this is the 20-year distribution of the ratio, which is the top subchart, and the bottom subchart is the actual ratio. It's the ratio made out of the continuous contract, so it's an artificial time series, but for these purposes, it's fine. And you can see that the seaboard wheat is incredibly cheap compared to hard red winter wheat, to the Kansas wheat. And here is the blue line where we are right now, and the left boundary of the green shaded area is the 5th percentile. So we are well below the 5th percentile. The seaboard wheat is incredibly oversold compared to Kansas City hard red winter wheat, and this is not the only thing. There is also
so how do you execute the trade? You do it on a spread between long Chicago Board of Trade short Kansas City. You do
yes, I will. Yes, I will get to it. I picked an example of a spread on the 4th chart, but I think that's actually the best way how to do it, maybe the only way how to do it. So yeah, that's what I would do.
Aren't there also, Pavel, some ETFs, I believe, by Tecrium?
Yes, there are ETFs, but I know that the Tecrium ETF, it holds different expirations. It's not concentrated on the front of the curve. But I'm not sure. I'm not sure if they hold just the seaboard wheat, but I think maybe they hold, also the hard red winter wheat, the Kansas City wheat. But I'm not sure, so I won't say it with certainty. So, but definitely you cannot trade this through ETFs, because you would need an outright ETF for seaboard wheat and a separate ETF for hard red winter wheat. And there is, I'm 100% sure there is no ETF for the hard red winter wheat. So that's the reason. So here we have the, the term structure on the seaboard wheat compared to the term structure on the Kansas City hard red winter wheat. And you can see the stark difference between them. The seaboard wheat is in contango, while the hard red winter wheat is in backwardation. And I think you can see when I add the 15-year average term structure at this part of the year that this is pretty much normal for seaboard wheat, but it's very unusual for the hard red winter wheat, as you can see here, because it tends to be in a similar contango right now, but as I said, it's in backwardation. And so that's also important. So there's a lot of room for some kind of normalization. And I must not forget,
a reversion to the mean type of trade.
Yes, exactly. These mean reversions are dangerous because the market always has more room to become even more extreme. But, I just think it already has become extreme enough, which is also what this chart is about, because this is the positioning in the seaboard wheat compared to the Kansas City, the hard red winter wheat. So, for example, we can compare the speculators, and you can see that the large speculators that manage money are incredibly short the seaboard wheat. And somewhat neutral, the Kansas City hard red winter wheat, and is the vice versa for the hedgers. So that's why I think it has become, extreme enough. And finally, here is another reason why the trade might make sense right now. Which is an actual spread between September futures, the CBOT and K-CBOT wheat, and it is the blue curve. It has already kind of bottomed, which is good because it's always, it's not wise to trying to catch a falling knife. So we can say that it has already bottomed, or at least there is a sign it is trying to bottom. And the seasonality is really favorable in the short term, as you can see on the averages. And there is a strong seasonal tailwind for this spread between roughly the middle of June till the middle of July. So this is one of the reasons why I like this opportunity in the short term. This positive seasonality is confirmed by the statistics by month below, where you can see that both June and July have been positive for this spread on average. This is the statistics for the actual spread, not individual commodities, because we need to analyze the difference between them. And so that's the final reason why I think it makes sense. Of course, anything can happen. One wild card is the situation besides the weather stuff you talked about. So another Ukraine, exactly, because the Ukraine is a major producer of hard red winter wheat. So if situation gets really bad, it might be a problem for this spread. But
isn't it amazing to you that Ukrainian farmers can bring in a crop in a war zone?
Yeah, that's pretty extraordinary. And
can you imagine that? Working your farm and hearing what's overhead or landing?
Yeah, especially close to the front line, because from what I heard, there are many farmers who are, trying to, work as usual, and they are close to the front line. And so that's really crazy. So
courageous. Anyway, just made me think about that. So I think the farmer has to be the most optimistic person in the world to want to go into farming, because when there's great weather, there's bumper crops, and so you have a lot, but you don't get much for it because everyone has a lot. And then when prices are good, it's because you couldn't bring in a crop like everyone else. So even though prices are high, you don't have the inventory.
You're right. And by the way,
who would want to do something like that?
Yes. I read
and
a
all
lot
the
of
labor, huh?
Yeah.
Anyway,
yeah, I read a lot of
I respect them.
a lot of stories by farmers. I am also in contact with many farmers from the US because they use our software. So especially the past years when the prices were low, those were pretty hard for many of them. But one thing I want to mention is still, you Americans have a great advantage that you have a working liquid futures markets for these products. It is something that's much more difficult elsewhere. So at least you can, if you have the right marketing strategy, you can hedge your production, or at least parts of your production in advance. I think it's really helpful. In Europe, it works a different way, although there are futures markets, for example, in France, but they are not that liquid. And here it is that, when there is a bad year, everybody just starts screaming for money from the European Commission and, socialize the losses. And this is how it works here. So I think the American system is much better. And, it's also much better. If you look at the data, the US is much more, I don't know,
transparent,
successful, or no, not transparent, but you can produce more efficiently with lower costs, and it just works better. I mean, so that's a positive thing about farming in the US. But I would say it's easier in Europe because of the socialism. So you can, when you have a bad year, you can always call for money from the state or the European Union or somebody like that.
You always have a very interesting take on a strategy for something that you see as a possibility for being a good buy. Instead of just outright going out and doing it, you find relationships within that. And to me, it smacks of risk management. You feel that these strategies, I mean, I have found you still have to have, even though it's a spread, like say, for example, you were entering that spread today, you still have to know if the spread works against you, where you're wrong, don't you? Or where you would, or where you are, or have at least a certain percentage amount that you're willing to risk on the position. How do you tell your clients to manage risk on a trade like this?
Yeah, I mean, we are not doing investment advice, so we do not comment on individual opportunities to our users. We are mostly, providing software, and we also do research. But
then let's do this. If you put it on the trade.
Yeah, because so if I would put the trade on, I would definitely not try to do anything like buy and hold. This is not even when I take a look at the spread itself, you can see that these moves are pretty large. This is so I forgot it is an intermarket spread, but these moves, this is something like 60 points. 60 points. That's
on a 5,000 bushel. That's
$3,000. So personally, like I said, I would try to enter it now, maybe wait for some kind of consolidation, but I would try to make use of the seasonal tailwind, which starts at the middle of June. That said, this is not something that works precisely on a day, so if the market can start moving up today, or it can even totally disregard the seasonality. So I would try to get in
by a pullback.
And maybe wait for some kind of small consolidation, and then keep a strict.
And then maybe risk the lows as a spread if it's making new lows.
Exactly, that's a good idea.
Like 240,
Yes, if the spread breaks below the previous low, that would be bad. But, you know, like I said, I can totally imagine just passing this opportunity. You know, I'm no longer a trader. I became an investor not a long time ago. So, but even if I would be trading, I would be very passive right now. And, you know, this is not a good
What are you worried about?
What I'm worried about liquidity crisis. You know, I'm worried about that we get something or situation when the dollar spikes, or we have some problem in the bond market, and we get a liquidity crisis that crushes everything. You know, all the commodities, no matter the fundamentals.
Yeah, you sell the kitchen sink in a liquidity crisis.
Exactly. And as I said, I'm mostly, regarding the commodities, I'm mostly watching the energy market because, like I said, I'm bullish about many things in the long term, but I still think the energy has not bottomed yet. And many of these things will depend on energy bottoming. So once I'm sure that energy has bottomed, or it is so oversold that it's just crazy enough to consider buying it, then I would be much more willing to enter long-term trades. So speaking about energy, you know, many people are trying to time this, but what I'm watching is not necessarily the net positions, but the net traders data that worked really well for us in the past. Because everybody is talking how the positioning is washed out and, you know, anything like that. But if you take a look at the actual data, like the net traders here, you can see that the major bottoms in both Brent and WTI, you know, the middle is the Brent data, the bottom is the WTI data. The major bottoms occurred when the speculative net traders indicator turned negative, you know, like in 2020, 2018, and even before that, you know, in 2015 and you know, these times. But we're not
close.
We are not even close to that. So yeah, the market, the energy market is oversold for sure, and I would not short energy, but it is not washed out. So I would either wait for a sign of strength in the market, especially in the structure of the market, the intra-dollar spreads, and not just in WTI, but also Brent and Oman crude oil. If we do not get that, then I would wait for the real washout, which is the negative readings in these indicators.
That's probably in the fall or, and you know, sometime in the fall or winter, I'm guessing, because if there is that risk-off liquidity trade, that's going to last a few months. I mean, maybe the panic part, but so say we're peaking here by the solstice in the S&Ps. That would probably, we should, and everyone thought the weakness was going to be in October. Everyone's waiting for an October crash. That's why I think look out for July. But it probably doesn't turn until, you know, maybe the S&Ps are 3,000.
Yeah,
if that happens, right?
Yeah, you know, I really try to avoid targeting specific levels because it rarely works. I'm at least not for me. You know, it's I prefer to always use the current market data to sniff, you know, changing currents in the markets. Let's call it that way.
You're a guerrilla warrior in the market. So you know, you stalk it. You don't even look at the obvious way to trade it. You're aware of risk, and you're trying to put as much of the probabilities of that idea on your side through spread trading. I respect your work, Pavel.
Yeah, thank you. I also like your work too.
Yeah, so it's really great to, you know, have you here. Your track record's been, you know, it's been very good since you've been a guest. And so everyone keep an eye on it. Do you have a quick comment on the sugar market? Patrick's asking. You were on top of that one before, you know, while it was somewhat popular, but not extremely popular as it became. So I know you.
Yes, we commented on sugar on Twitter, I guess, a few days ago.
In an interview too. I think you brought up sugar.
Maybe.
Yeah,
and
maybe.
Yeah, I'm very sugar because you know, the spreads, you can see the spreads, the interdelivery spreads here. And they have been weakening even before the sugar itself.
The sugar topped,
and you can see that it is widespread. It is the weakness can be visible across the curve, so it's not just focused on the near end. So that's one reason why
it got too popular.
Yeah, and definitely,
bulls.
Yeah, and you also must realize that sugar is correlated with energy into some degree due to the biofuels and so on. So the weakness, the sugar has ignored the weakness in the energy market so far, but I think this is about to change. Not just because of the spreads, but the positioning is really blown out, as you can see here in the commencements of traders data. And this is not a timing indicator. You can see that you know, the market has been overbought for a period of time, or since the end of last year, but it creates conditions for a potential sell-off. So I would personally avoid shorting the market that, you know, has such a strong momentum, but I think right now it will turn, especially because of the weakness in the spreads. So
great warning to everyone who's following the herd right here.
Yeah, so, and we have I can see we have a signal in our signals on spread charts, and these are, you know, just signals generated by a machine learning model, some kind of AI, which is trendy to say these days. And we have a signal on a sugar bear spread, and the signal was valid since the end of April. And maybe that's a much better idea to make use of the opportunity than trying to short the sugar itself. So
are you human or a hologram?
Why?
Just
I
don't know. You know, all my every question I asked you today came from ChatGPT.
No,
because I can't think of it. You know, I need chat to give me things to say, because I'm pretty shy, and I get real nervous doing interviews. So anyway, I'm kidding you, bro, and thank you so much, my trading warrior brother who doesn't really want to trade right now.
Thank you
for presenting the wheat idea to us, and appreciate the content you bring to F.A.C.E every time you're here.
Thank you, Dale. Thank you for inviting me.
Okay, we'll talk in the fall.
Yeah, great. Looking forward to that.
All right, everyone. That's Pavel Hala. Follow him at spreadcharts.com, spreadcharts.com. Go to his website. He has some great free material for you to, you know, there's a look at, you know, some of the things you could check out. And your website address, Pavel?
Yeah, our website is simply spreadcharts.com. So you can visit our spreadcharts, and you can sign up for our software. We have also a free version, which is really powerful. It's not just some kind of demo, or you can use the you know, premium features and advanced stuff like the signals I showcased today. But even the free version is cool.
Rooting for you, bro.
Thanks, Dale.
So I'll talk to you on Twitter, and we'll set something up for the fall. Pavel Hala, everybody. Follow him at spreadcharts.com. And you could join the team for the morning edge in about 16 minutes. Good hunting on Turnaround Tuesday, everybody. And don't just count your pips or your cubes of sugar. Count your blessings, and we'll see everyone tomorrow. Adios. Thanks again, Pavel.
Yeah, thanks, Dale. Bye.
All right. Adios, everyone.